This afternoon, the Federal Reserve will issue its latest decision on interest rates, and markets are pricing in a near 100% chance that the rates will remain unchanged. Inflation still remains well above the Fed's 2% goal, however. I want to bring in CBS News MoneyWatch correspondent Kelly O'Grady, who's joining me from Washington, D.C. And Kelly, you're in D.C. today because you will be at that Fed press conference later that Jerome Powell will be holding. So what are you expecting to hear from him with regards to interest rates and the threat of inflation?
Vlad, I am expecting to hear a phrase that we hear Chair Powell use a lot, that we are in a wait and see mode. And that's really been the messaging over the past couple of months because there are so many different dynamics that are occurring in our economy right now. We have trade policy with tariffs going into place that could spur inflation potentially. We also have consumer sentiment and consumer spending sort of dropping. And so really what I am looking to hear from Powell, what I'm hoping, maybe not expecting, is some clarity. Where do they think inflation is going? How many interest rate cuts should we expect this year? Remember, we're looking at 2 right now, but, do they still expect to hit those? Where do they see GDP going? I think we're not going to get a lot of information from Powell, but Vlad, I can tell you I am going to try my best to press him to get some answers. Because in the past, he said, we're in a wait and see moment, but trade policy is here. Tariffs are here. And I think at this point, we're all hoping and expecting for a little bit more clarity on where the Fed thinks things are going. And investors certainly as well are looking for that, too.
I think it's for our younger viewers, it's important to point out how rare it is to hear a United States president or a secretary of the Treasury or anyone in a president's cabinet mention the R word, recession. And it does strike me, Kelly, that in the last couple of days, last couple of weeks, we've started to hear a almost soft approach to using that word in either interviews that the president and others have given to news reporters, or even in just the narrative that they're building around a possible recession. Because those indicators that you just talked about, would you call those warning signs?
I would say they're warning signs. This is not red at a stoplight, but we're starting to change from green to yellow. And look, to be fair to the White House and to his cabinet members, we, the media, are the ones who are putting that word out there, and we are asking them because of these warning signs we're seeing. It's not something that they have thrown out there themselves, but they have yet to deny that that's a possibility. And yeah, when you have consumer sentiment falling off a cliff, essentially, it's what we like to call a soft indicator. It's not hard data like a jobs report or inflation, but it does potentially spur lower spending because when consumers feel anxiety, then maybe they don't go spend as much, which then, of course, consumer spending is 2/3 of GDP. You start to see where we could get into a recession because the technical definition is 2 quarters of back-to-back negative GDP growth. I will admit, inflation and the job market, we're still in a relatively good place when it comes to the hard data. The fear, though, is just that these softer things could spur us into a point where those warning lights become red stoplights.
CBS News MoneyWatch correspondent Kelly O'Grady, always shedding light and analysis on really difficult and complicated subjects. Thank you, Kelly.